You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet. Welcome to another episode of Acropolis's New Foundations podcast. Acropolis is the Bitcoin treasury platform for businesses built on multi-institution custody. And in studio with me today is Joe Consorti. He's the head of growth at Horizon and previously a contributor to Bitcoin Magazine, head of growth at Theya, and institutional lead at the Bitcoin Layer. So he has been working and operating in the Bitcoin space for longer than I have, which means something. And today we're going to be talking mostly about Horizon, which is a new company that helps you convert your home equity into Bitcoin. Joe, how are you? Thanks for coming.
I'm doing great, Chase. Thank you for having me. And I think this is the first show that I've been on where I am not the person who's been in Bitcoin for a smaller amount of time in the room. Usually I'm the newbie. So happy to be here.
Great. And it sounds like your spirits are up despite a lot of what we're seeing in the space today. Another down day. I see you've got the block clock behind you. The first couple digits, let's just say it starts with an 8. And I think that would have surprised a lot of Bitcoiners, including myself, to see us going into the end of the year with an 8 as the starting digit. So sitting around 86K, 87K today. Price is down, but sentiment seems to be crashing even harder than price right now. Do you have any thoughts on just what's going on in Bitcoin, what's going on with the Bitcoin community in general before we start talking about Horizon?
Absolutely. So a couple of different things here. Talking about sentiment, I have been posting about it. I posted 8 days ago that sentiment was as bad as it was at the 2022 low for Bitcoin when it was $18,000. But there's one hair in the ointment. There's one caveat to this. It doesn't necessarily herald that this is a local bottom for Bitcoin. We could very well be on the cusp of a much longer bear market that could see us plunge to levels like potentially the 200-week moving average, right, which is about $55,000. When you see an inflection in sentiment to you start seeing these really bad levels, that typically indicates one of two things. Like either you are at a local bottom, which has been the case during this bull cycle, or you are on the cusp of a bear market beginning. So either of those things could be true. We'll have to wait and see. But obviously, Bitcoin's price action for the entire year has been very tumultuous. And even though we're only down about 4 to 6% over the last year, beginning January 1st, we're down, I think, about the same, 4 to 6%. The sideways price action is really what kills people. Because when Bitcoin is moving down and it's moving down with force, that tends to be something a lot more people can wrap their minds around. They go, okay, we've entered into a bear market. However, this entire last year, equities have only started plunging at the end of October, right when the government reopened. Whereas Bitcoin has been plunging since the beginning of October. Obviously, it reached its high on October 6th. And for most of the year before that, it had been channeling sideways. And so that's why, relative to the equity market, which is now starting to see much poorer sentiment, Bitcoin has had this terrible sentiment for quite some time. The other component to consider is that this most recent drawdown, it's about a 32% drawdown. We're at $86,000 now. We've already had 2 of them this cycle. So we had one last summer at the beginning of the consolidation period. We topped out around March, and around late September, early October to the beginning of November when Trump won his election, Bitcoin drew down by 30%. This April, over the course of about the beginning of February, end of January to the middle of April, Bitcoin fell another 30%. And now over the last 40 days, Bitcoin once again has fallen over 30%. So this is a third 30% drawdown, but the speed and severity of it this time around has been much worse than the other drawdowns. And as a result, sentiment is much worse. So that's kind of where we are in the market currently. I tend to think that the macro backdrop over the next several months is very, very supportive, given that not only the Fed is priced to do another 100 basis points of rate cuts between now and next September, but also the fact that they are ending quantitative tightening in order to support bank reserves beginning on December 1st, which have reached territory that historically is considered to be scarce, right? Not scarce in the close to $0 sense, but scarce in the post-QE 1, 2, 3, and 4 sense. where banks need to be flooded with all of this capital in order to continue extending credit. We're nearing the point at which those are considered scarce. And so chances are, not only is the Fed going to stop the rundown in its balance sheet, but it's actually going to begin expanding its balance sheet very soon. And so over the next couple of weeks, I tend to remain bearish on BTC. There is a lot further downside. I tweeted yesterday, I said something like, it can get much worse before it gets better. Very, very simple. So I do think there's much further downside for Bitcoin. The next big target for me is a 100-week moving average, which is at 83,000. And then beneath that, it's really just $55,000 that we're looking at, right? As that would kind of be considered the bear market floor if we are entering into a bear market, right? So a bit of a long-winded answer, but if we are on the cusp of a bear market, which I don't believe we are, given the macro backdrop, we're going to be going into outright easing mode over the next couple of months, then chances are, these price targets could get hit all the way down to potentially $55,000. But if we aren't in a bear market and we're just seeing this transient weakness before the Fed kind of fires up the engine again, then chances are the downside for Bitcoin from here is pretty limited.
Yeah, it's hard for me to ever be bearish on the macro outlook for Bitcoin just because I'm infinitely bearish on the fiat Ponzi and money printing scheme. And so Bitcoin as a solution to that over any long enough time period is, I'm impossibly bearish on fiat. And so it's hard for me to be anything but long-term bullish on Bitcoin. But yeah, it does seem like we could go lower here. I think part of what we're seeing with sentiment right now is that a lot of Bitcoiners had high expectations for this year coming out of the halving, strategic Bitcoin reserve. It seemed like everything was going our way, wind at our backs, a new administration, favorable policy. And here, a lot of Bitcoiners are watching gold bugs outperform them for, maybe the first time in their Bitcoin investing careers. And I think one other thing that might be happening, or at least it's something anecdotal that I've seen in my life, is a lot of Bitcoiners saw the 100K Bitcoin price. They did their victory laps with their friends and families, and Bitcoin kept climbing up towards that 126 level. And then finally, friends and families of their Bitcoin maximalists capitulated and bought some Bitcoin. And now these very short-term tourists are seeing quite the price drop. And I wouldn't be surprised if a lot of them are getting shaken out of what is really just a 2 or 3 month long position. So yeah, it's brutal out there right now, but personally, I am absolutely unaffected. Volatility is nothing to me at this point. And when you've been in it for enough cycles, you really become numb to it. I'm curious, on a personal level, are you feeling this, or you're just kind of following the market in a more objective, logical way?
Yeah, I would definitely say the latter, right? And I definitely have the benefit of being here now. This is my second bear market. It's interesting. When I first left school early, so I left school early in order to build the Bitcoin Layer, which is a Bitcoin and Global Macro Research publication with Nick Bhatia out of Southern California. We have obviously scaled that up to a tremendous degree. I have since departed, and now I'm building a couple of other companies. But it's funny, when I left school to start writing, it was actually during the bear market. So during that period when Bitcoin went from $60,000 all the way down to 18,000. And so that was kind of when I got my markets training, per se, of learning about Bitcoin as an asset, how it interacted with all of these other markets. And so I'm looking at it through a much more objective lens and understanding a couple of different key realities here, right? So reality number one is that Bitcoin today is a fundamentally different asset than it has been in prior cycles, meaning the cohorts that are the primary ownership components of Bitcoin today are different than they have been in cycles prior. In cycles prior, it's a very niche asset. It's held primarily by retail, and it's much more speculative in nature than what it is today. Today, post ETFs, right, you can kind of categorize Bitcoin in these two different eras so far. In these, we have the halving epochs, and you also have these, what we can call them, pre-institutionalization and post-institutionalization epochs. So prior to January 2024, we had this primarily retail-driven mania, where you had these massive booms followed by these devastating busts. Whereas today, Bitcoin's price action is much more stable because the folks that are holding it are pensions, they're endowments. Harvard, its single largest position in the Harvard endowment is now IBIT, right? The BlackRock iShares Bitcoin Trust. And so ultimately, Bitcoin as an asset today is much more stable. It's being held by folks who don't plan on selling. And a key data point to actually drive this point home is that, well, number one, I talked about the drawdowns that we've already experienced. So we've experienced three 30% plus drawdowns during this cycle, yet Bitcoin has managed to increase 450% from $18,000 all the way up to $126,000. That's point number one, right? And so these drawdowns have been truncated, they've been absorbed, and we've been able to advance higher. The second component that really helps to paint this picture is that if you take a look at the spot Bitcoin ETF assets under management relative to Bitcoin's price, in the same period that Bitcoin's price is down 30% from 126K to 86K, as you can see behind me, the assets under management in the ETFs is only down by 6.5%, right? So that tells you the selling isn't coming from this new guard, it's coming from the old guard. It's coming from this retail crowd who chances are they're trying to sell at or above $100,000. It's what we've seen for most of the year. It's been a key psychological level that a lot of people didn't believe we would ever hit. And those OG holders, those people who hold, hundreds or even thousands or tens of thousands of Bitcoin, they've had to hold through so many tumultuous circumstances, right? China banning it, people in an administration in the United States prior to Donald Trump's current administration that was avowedly against Bitcoin. They've held through thick and thin for over a decade, and they're finally at the point that they have this massive buy side, this institutional acceptance, and this liquidity profile that will absorb their selling. And so for them, they're selling into this, whereas the ETFs are more than happy to scoop them up. And despite this weakness, it's actually very, very encouraging that we're not seeing a lot of selling happening from the ETFs, which tells you that Bitcoin's only going to get more stable as time goes on, right? And so for me, I'm not looking at this dip and getting extremely scared. I'm quite encouraged by the resilience that this new guard of Bitcoin holders is having in the face of this 30% drawdown. And I tend to think that we can go much lower from here, or we can stop out relatively soon. It all depends on what the broader macro conditions set out to do. Yesterday, NVIDIA beat earnings to a marginal degree, but either way, it beat earnings. Obviously, that has been the primary support mechanism for the rest of the market. If NVIDIA beats earnings, then we have this huge rally, and NVIDIA is now red on the day. And so we're seeing these events have less of an impact on price. We're seeing basically all of these rallies, whether you're in Bitcoin or in equities, quickly reverse, right? So any big rally that Bitcoin tries to have, it immediately gets sold into. And so for me, that's very telling. It tells me that despite the amount of buying that's happening, the price cannot advance higher. There are just way too many sellers in the market right now. Chances are we're entering into a bear market. So the question becomes, will this be a massive 50, 60, 70% drawdown bear market of yore? I don't believe so, right? Because of this new ownership cohort of Bitcoin that is much less flighty. We talk about long-term holders in the Bitcoin sense, but it's funny, in Bitcoin, a long-term holder is defined as anybody who has held their Bitcoin for over 155 days, right? Which is crazy. In TradFi, you would think a medium to long-term holder is somebody who's been holding this asset for 5, 10, 20 years plus, right? A long-term holding into the traditional finance sense is something you plan on holding for 10 years or more. And so because we're seeing that regime shift, I tend to think this will be a much more truncated bear market, both in the amount of time that it takes for us to finally find this cycle bottom, and also in the actual percentage that comes off of Bitcoin. So those are my high-level thoughts on the market. I'm not too concerned about anything now. And again, I tend to think the macro backdrop over the next 6 to 12 months is extremely bullish for not just Bitcoin, but all of the risk assets. And I think this period of underperformance just represents a wonderful buying opportunity amidst that context.
Yeah, I'll try to transition into Horizon now. Let's see if this lands. But we've seen the change in ownership with Bitcoin, and we're bound to see a change in ownership in the real estate market as boomers pass away and pass their homes and their real estate portfolios on to younger generations who probably are less interested in managing and handling the maintenance and renters and all of the various aspects that go into managing a real estate portfolio. A lot of these younger generations would probably prefer to just own some Bitcoin. So Horizon is operating kind of at the intersection of real estate and Bitcoin. So why don't we start with just your high-level explanation of what is Horizon and is it operational today?
Yeah, so Horizon is really neat, and I'm excited to chat about it. I'm really excited to be a part of this company. So for context, the team behind Horizon also built Theya. So Theya, to my knowledge so far, is the first and only Bitcoin-only company to have gone through some of the biggest startup accelerators in the country. So we're talking about Y Combinator, Hashed Emergent, General Catalyst, these massive venture capital arms. And being a Bitcoin-only company, generally that's quite hard to do. Obviously, Coinbase is famous for having gone through Y Combinator, but Theya is the only but they're a crypto company, right? And obviously, you and I and probably the listeners here understand the difference very well between Bitcoin and everything else. I still, to this day, whenever I'm writing, I put crypto in quotation marks because I tend to believe that crypto is an affinity scam, right? So anyway, that's the team behind Theya. Now, one of the things that we realized was that a lot of our clients were coming to us and asking us about Bitcoin-backed lending solutions. Now, being a multi-sig self-custody company, that's quite a hard thing to accomplish, and it kind of goes against the ethos of your company. Holding your keys in cold storage is kind of antithetical to this idea of posting your Bitcoin as collateral in order to get dollar financing against it. And so we effectively said no in a very kind way to the customers who were asking about this, but we did begin tinkering and thinking about, okay, rather than Bitcoin-backed financing, what about real asset-backed financing in order to purchase Bitcoin? And then it became a question of, okay, what are some of the world's largest, most liquid assets with the most developed lending markets that would allow us to easily create a company where people could take their real-world asset, post it as collateral effectively, and then acquire Bitcoin against it, in a way that poses no price-related liquidation risk. That is one of the biggest components because, we didn't want to create something like FTX or Celsius where, you're posting some asset in order to get financing. And then if that asset drops below a certain level, or if Bitcoin drops below a certain level, you get liquidated out of your position. We wanted to figure out a way where you could post an asset as collateral, buy Bitcoin using that asset, and then hold it for the long run without fear of price-related liquidation risk. And that's where we stumbled upon home equity investing, and that's where Horizon was born. So Horizon is live today, and effectively what we help homeowners do, that was kind of the introduction to what this company allows folks to do, is that we help homeowners convert their home equity to Bitcoin. And this is a process that can be done in 2 to 4 weeks. It's faster than the traditional loan process. There's no hard credit check. There's no obligation for the entire process. And we've helped a few dozen homeowners at this point over the last couple months that we've been live actually facilitate this and get this done for their property. And effectively, the way that it works is that rather than taking out a loan collateralized by the home, where there's interest that's accruing on your principal every single month and every single year, the way that Horizon works is, let's say you have $1 million home. What you do in order to acquire more Bitcoin, instead of taking out a HELOC that comes with monthly payments or taking out a reverse mortgage that's effectively this deferred interest loan, it's very predatory. What we do is the homeowner sells our provider a future share of their home's value down the line in exchange for tax-free cash today to deploy into Bitcoin. And through the Horizon platform, we make that process extremely easy and seamless, and homeowners can see their home's Bitcoin potential in under 90 seconds, submit an application, jump on a call with us, and get an application in hand. So it's extremely unique, and a couple of really compelling data points for why we think this company is really just one of many that's going to crop up over the next decade, and why we're uniquely positioned to benefit people over the next decade is that real estate is in the process of being demonetized. One of the things that you brought up, Chase, was that younger people are realizing that real estate is not necessarily a great financial investment, right? But over the last 50 years, since we left the gold standard and money has become untethered from physical reality, it has become a financial asset by necessity, right? Real estate's properties are kind of constructed in such a way that it kind of inadvertently serves as a good financial investment. It's relatively scarce. It's difficult to build. And so as a result of that, money tended to flock to real estate. One of the single most popular career path for folks that are my age, I'm 24 years old. It's a really disconcerting survey. Everybody my age that isn't going to be a lawyer or whatever, they want to be a landlord, right? They want to be a rent seeker. They want to own properties and then take in cash flow from that. But a lot of the folks who are planning on doing that are coming around to the reality that, wait a second, being a landlord is actually kind of terrible, right? Whenever the AC breaks, that destroys all of my cash flows for the entire year. If I have a tenant that makes a mess of the property, I have to spend weeks or even thousands of dollars hiring a cleaning company in order to get that up. You're operating on potentially 1 to 2% cash flow every single year, and then any little piece of maintenance will wipe out your cash flow entirely. On top of that, mortgage rates are at 6.5%, and home prices are still extremely elevated all across the country, except for a few key markets like South Florida, Central Florida, and other places. And so because of that, right, the idea of buying a home and renting it out has never been less feasible than it is now. And more people are coming around to the reality that because Bitcoin exists, it's the perfect tool to soak up all of this excess speculative capital that's currently in things like real estate and allow real estate to deflate back down to its utility value. And so effectively what Horizon is If you believe that Bitcoin is demonetizing real estate, or even put more simply, if you believe that Bitcoin is going to outperform your home over the period of time that you're living in it, whether it's 4 years, 5 years, 10 years, 20 years, effectively Horizon has created a way where you can capitalize on that trend, right? Where if you believe that Bitcoin is going to do better than your home over any given period, we allow you to swap a prudent portion of your net equity into Bitcoin, let it ride out. You don't have to worry about monthly payments. You don't have to worry about new debt or term limits. And then whenever you sell the home or settle up voluntarily, that's that. You keep 100% of the Bitcoin, and our provider shares in your home's upside and your home's downside. And that's it. And so we're extremely excited about the product. Over the next decade, I think this is only going to be a trend that accelerates real estate being demonetized, commercial and residential properties being sold, and homes becoming places to live again, instead of just, these financial assets. So a lot of information there, but I'm extremely excited about what we're building. And that's kind of the high level details about it.
No, that's an excellent starting point. And so you mentioned that real estate is in the process of being demonetized because of better store of value assets like Bitcoin that are not going to call you at 2 a.m. because of a busted pipe or a broken AC. Right. So I imagine when you say something like that, though, it's probably not what the capital provider that you're working with wants to hear, right? Because they're essentially on the other side of that trade. They're taking ownership in the real estate. Whereas the borrowers, let's take myself, for example, my family has a property in Marin County, California. We haven't sold it because the tax would be incredibly prohibitive. So we've been looking out for solutions like Horizon as a way to tap home equity and deploy it into something like Bitcoin. How do you speak to that capital provider? What is the incentive for them? Because it doesn't sound like Horizon is on the hook for an interest rate. What is it that they're in for other than just the upside on the real estate?
Absolutely. So in the same way that you and I believe that Bitcoin is going to be this asset that 10 years from now, 20 years from now, 30 years from now, it's orders of magnitude higher than it is today. Real estate, you could argue, is such a politically protected asset class at this point that it's also going to appreciate hand over fist. And so when I say that Bitcoin is demonetizing real estate, that's not meaning that home prices are going to deflate, but rather that they're going to disinflate, especially relative to Bitcoin. So that's what I mean. I think if we're talking about assets that have a future and will continue rising, basically ad infinitum, they're twofold in my mind. They're Bitcoin and they're real estate. And the reason being is that homes represent anywhere between 40 and 60% of the average American's net worth. I believe the latest calculation is 54%. So 54% of the average American's portfolio is tied up in their primary residence. And one reality that we've seen time and again is that anytime home prices seem to be at risk, anytime the stock market seems to be at risk, the Fed swoops in with some kind of liquidity facility in order to save the day and continue churning the wealth effect and continue driving people to spend money into the economy. And so for our provider, they're incentivized because effectively they believe that homes, residential real estate, has asymmetric upside over the next 5, 10, 20 years in the same way that you and I believe Bitcoin has asymmetric upside over the next 5, 10, 20 years. That's not to say down the line we won't find a capital provider or bring capital financing in-house and find someone who's willing to also take a part of the Bitcoin. But for the time being, effectively, we have found Bitcoin agnostic home equity providers or home equity investment providers and real estate agnostic Bitcoiners who just want to live in their home, but they're dissatisfied with the growth rate on it. And we've kind of married the two, right? So it's kind of a match made in heaven. So that's what I would say to that degree, right? Obviously, as is the case with any bank, some mortgages people lose out on, right? This contract isn't considered a mortgage, but if we just take a mortgage as the analogy because it's the most helpful thing for the audience, some people who take on a mortgage will default, right? Undoubtedly, some homes will catch on fire, right? There are any number of risks with owning real estate, but this provider is more than comfortable with assuming those risks in order to get that long-term exposure to residential real estate. And the homeowner is more than happy to give up that chunk of exposure, whether it's 5, 10, 20, 25% of their home's future value in order to buy Bitcoin today. So it's basically two sides of the trade. Both of them think these assets are going up. I'm not of the belief that home prices are going down. I think they may stall out in certain markets. But if there's one truth that we've seen, it's that time and again, when home prices are threatened, the Fed steps in, the US Treasury steps in to save the day. The most recent example of which, not to get too off topic here, but to bring this up, the housing affordability crisis has been the talk of the town within this country for the last several years, and it's really ramped up this last year, and rightfully so. The cost of owning a home has never been higher relative to the median wage in this country. And so young people in particular, like myself, are looking for their politicians to work for them and find real ways of getting into their homes. And the only solutions that have been presented so far are ones that would not threaten the price of homes. So for instance, the 50-year mortgage, right? Young people want to get into a home. The politicians hear that and they say, okay, we'll do a 50-year mortgage. Why is that? Because it will allow younger people to qualify, right? It'll allow younger people who are earning less money to qualify for a mortgage. However, it'll not threaten home prices, right? The way that you actually solve that, it'll saddle them with a completely insane amount of debt, a generation that is already so over indebted, but it won't threaten home prices, right? It'll effectively, by increasing loan availability rather than increasing supply of homes, you're not threatening home prices whatsoever. And so for me, that's a long-winded way of saying I'm of the belief that home prices will continue going up, just not as quickly as Bitcoin will, right? And so that's effectively what our capital provider is getting out of it. They're getting exposure to this asset that they believe, and I believe, is going to continue doing well. And the homeowner, the Horizon user, gets exposure to the asset that they believe, I believe as well, will outperform homes over the next 5, 10, 20 years.
Okay, and is the capital provider something like a REIT that is looking for diversified exposure to real estate across the country, or is it not quite like that?
It's not quite like that. So currently we're partnered with a number of home equity investors, the primary one being Cornerstone Financing. More information about them can be found on our website, joinhorizon.com. You scroll down to the FAQ, you can learn a little bit more about them. But effectively what they are is they facilitate these home equity investment contracts, and they have a very large pool of outside capital. Doesn't come from real estate investment trusts. It actually comes from individual investors, family offices who want long-term exposure to real estate. As we scale out though, that is a really interesting component because the possibilities for Horizon's model are effectively endless. If we were to IPO down the road, we could issue something like a real estate investment trust that has, let's say, 50% real estate exposure, 50% Bitcoin exposure. I believe that as Bitcoin becomes a more institutionalized asset, kind of bringing it full circle to what we were talking about earlier, I think more people will be willing to underwrite Bitcoin. And so the possibilities to create those Bitcoin and real estate hybrid vehicles will increase over time. But we're at a point where we're not quite there yet. And so this is sort of V1 of the Horizon model, where we found this outside capital from a provider who's sourcing the outside capital from a number of massive individual investors as well as family offices. And we're pairing the homeowner with them rather than it coming from a real estate investment trust.
Okay, and I'm glad to hear that you're already thinking about some of those other structures, because one of the things that I was expecting to come to market is something like a 1031 exchange, where we would be able to sell our property in California, 1031 into some kind of a real estate-like package with Bitcoin exposure in a tax-free way. And so it sounds like maybe that's something that could become a future product offering from Horizon.
Absolutely. I mean, the possibilities really are endless. If you take a look at Grant Cardone's offering down in Florida, he's created a Bitcoin and real estate hybrid fund with one of his buildings. And so in my mind, that's the first major, very large example of this happening at scale. And I believe that as the underwriting standards become more they grow more in Bitcoin's favor, then you're only going to start to see these vehicles crop up more and more. And a model like that would only make it more efficient for the homeowner. So our mission is to make it as efficient as possible for the homeowner to swap their home equity for Bitcoin. Currently, our process takes anywhere from 2 to 4 weeks. There are a couple of manual steps, but really in our mind, we want to make this the most seamless, beautiful, enjoyable user experience possible. And so as time goes on and we come out with these new structures, we really want to make it so that we truncate that process. Instead of 4 weeks, it takes 3 weeks. Instead of 3 weeks, it takes 1 week. Instead of 1 week, it takes a number of days, right? The valuation process for the home can go from needing an in-person appraisal to not needing an in-person appraisal. So we're looking at any number of options in order to make this easier for the end user. And this is really just day one of a massive trend. If you take a look at the numbers, Bitcoin has grown 14x relative to global real estate in the last 6 years. And I tend to think that that's going to continue accelerating over the next several years, right? Not only from people selling their real estate and directly purchasing Bitcoin, but also just Bitcoin soaking up more of this speculative excess from other financial assets. And so as Bitcoin soaks up this speculative capital, real estate is going to continue becoming a less enticing investment. And more homeowners, currently investing your home equity, particularly into something like Bitcoin, is something that's extremely niche. I believe that it's going to become rather mainstream, right? Because it's effectively, more often than not, especially for homeowners who may be, 35, 40, 45, 50, it may be their single largest asset, bigger than their retirement, but it's one that's only growing at anywhere from 3 to 6% per year, right? While Bitcoin over a 5-year time frame does 45%, while the S&P over a 5-year time frame does 18%. And so I think, like, for now, it's quite niche, and not a lot of people know about it or understand how it works, and they think there's a huge misunderstanding about the risks associated with it. I believe that we're positioned for, as this becomes mainstream over the next 5-10 years, we're really positioned to dominate and to help a lot of homeowners in this field.
Yeah, and it's worth noting that you've done a lot to try to de-risk this type of agreement because, like you said, the borrower does not have to come up with any upfront capital. There are no monthly payments, and the capital provider is participating in the downside risk. So, really your risk does seem pretty well limited in many ways. I'm curious, how is it though that the borrower's capital, that the capital a Horizon customer would receive, can receive that tax-free? Because aren't I essentially selling a percentage of my home to the provider?
So it's a non-taxable event, which is quite nice. So in the same way that when you are, refinancing your mortgage, for example, it's considered a very similar event. And so we've been able to structure it in such a way, and this varies state by state, but every state that we operate in where the home equity investment is a licensed and lawful agreement, which are the only states that we're operating in, it is a non-taxable event, which is one other thing that we wanted to make sure of. Because it's one thing to be able to draw anywhere from, $20,000 to 22-ish% of your home's net equity in order to buy Bitcoin. So for instance, if you own $1 million home free and clear, a homeowner could draw $220,000 of that to deploy into Bitcoin, right? At a maximum with Horizon. But it's a much different story if all of a sudden now your tax bracket is as if you're earning $220,000 plus a year. It's a much different story. And so when we set out to do this, we wanted to make sure that we had a provider who'd be able to facilitate this in a tax-free manner.
And so Horizon is sitting in the middle of what is essentially the real estate versus Bitcoin trade. Both, I agree, are bound to appreciate in value because the Fed needs to print money and they need asset and home prices especially, which is really foundational to wealth in America in particular, to continue to climb. And Bitcoin is just going to absorb that excess capital. So both assets should perform incredibly well over the coming decades. Which states are you operational in today? And I'm curious, out of those states, where are you seeing the most demand?
Absolutely. So I'll pull up the full list here. I actually have it in front of me. But far and away, the most demand that we're seeing is from California.
I figured.
So California, obviously the largest state in the union, even though at the state level, they're not necessarily the most receptive to Bitcoin. Not as bad as Massachusetts, my home state, but they're not very receptive to Bitcoin. The homeowners within California are extremely tech savvy and tech forward, which is something that was extremely surprising to me. And so I would say like 50 to 60% of the users going through Horizon are coming from California. The second highest state as far as users go is definitely Florida. So we're currently available in Arizona, California, Washington, D.C., Delaware, Florida, Missouri, New Hampshire, New Jersey, Nevada, Ohio, Oregon, Pennsylvania, South Carolina, Tennessee, Utah, Virginia, Vermont, and Wisconsin. So a bit of a mouthful, but that's 18 states, that we're available in now. And we're planning on launching in another 16 over the coming weeks. And so 34 states in total over the next couple of weeks, ideally before the end of 2026, with hopeful plans to get into some of the larger outlier states that we've yet to appear in. Texas is the single most demanded state. Unfortunately, Texas is quite difficult to get operational in as far as licenses are concerned. And every single state that we operate in, we want to make sure that we have all the needed licenses and we've spoken with and acquired the licenses from all the regulatory bodies that we need to, because these vary on a state-by-state level, right? In the same way that it's really tough to become a Bitcoin exchange or a broker in every single state, with home equity investing and with a business like this, it's as hard, if not even harder. So those are the states we're currently live in with rapid plans for expansion over the next couple of months.
Okay. Every business will hold Bitcoin. Some already do. Others are developing a plan. Acropolis is how smart companies take action today. Built on multi-institution custody, Acropolis delivers a turnkey Bitcoin treasury solution designed specifically for businesses. Here's why that matters. Multi-institution custody is the breakthrough that unlocks the corporate adoption of Bitcoin. It eliminates the need for employees to hold cryptographic material and removes reliance on any single custodian. Instead, Bitcoin is secured using a 2 of 3 multi-signature quorum, where each key is held by a separate, regulated institution. No single party can move funds on their own, eliminating single points of failure and greatly reducing risk. We act as an extension of your treasury team, managing institutional-grade custody, insurance, continuity planning, and strategic advisory, so your company can adopt Bitcoin confidently and securely. If your team has been sitting on the sidelines, unsure of how to get started, or worried about getting it wrong, this is your signal. Visit acropolistreasury.com and schedule a consultation. Bitcoin is reshaping corporate finance. Don't get left behind.
Well, congratulations. That's a bigger rollout thus far than I was actually already expecting for you guys. So congratulations. The company is relatively young, if I'm correct. How old is the business so far?
So the business is about 6 months old. We announced that we were going live in Vegas this year, so back in May. And we had a massive, we had an explosion in the amount of people who were interested in the product. We had this initial wave of demand, and we're currently actively raising outside capital as well, and that's going tremendously well for us. And so demand has been consistent. It's only been ramping up. We can see, our internal leads tracker and the amount of calls that we're taking and the amount of people that we're patching through to our financing provider is only increasing week after week, which is encouraging. So it's telling us that, this isn't just a business that's going to do well when Bitcoin's price goes up. People actually want to buy Bitcoin using their home equity. They want to buy the dip using their home equity, right? Yeah. So that's really good news for us, right? We're a very young team. We're a very lean team, but with rapid plans for expansion, right? Because obviously as your needs grow, as you get more customers, as the rate of customers coming into your business increases, you need to expand that, right? There is utility in staying lean, but at a certain point, you hit a constraint and you need to expand the team, and that could come sooner than later for us.
Great, exciting. As a founder operator in the Bitcoin space myself, and previous multi-time founder that's had to raise capital for various startups, I'm curious what that experience has been like. Are you focused on Bitcoin-only VCs, of which there's a growing network and amount of capital and a lot of providers there, or are you going to more of traditional angel investors, VC?
That's a really good question. So it's a combination of the two. I can't speak too much to it because I'm not on the capital raising side as much. Those would be a couple of our other co-founders. I'm more so on the front-facing marketing, sales, content, research, kind of running the whole gambit, doing shows, doing content of our own. But what I can tell you is that it's been a mix of the both, which is quite interesting. I would anticipate that for a company like this, for a Bitcoin-only company, especially in years prior, it may have been really difficult to go and raise outside capital from traditional VCs or even real estate venture funds. But what I will say is that I've been very surprised with the variety of folks that we're speaking to and the variety of folks who are interested in. So I can't name names, but we do have some of the major Bitcoin VCs who have expressed interest. But also there is a hefty amount of demand from your more traditional capital allocators, your more traditional venture capital arms, which is hugely encouraging, right? Because it speaks to this trend and it validates this trend, this idea that Bitcoin is it's grown up, right? It's now 16 years old, and the people who are interested in investing in this and pushing it forward into the future are not just the folks who are living in Austin, and they're not just the folks who are Bitcoin only, Bitcoin native VCs. The amount of TradFi capital that's interested in the space is astounding to me. That's what I can say. It's hugely encouraging. We see folks like, obviously this is a bit of an aside, but it kind of speaks to the point, JP Morgan, right? They were avowed Bitcoin skeptics for years, and now they're talking about accepting Bitcoin potentially as collateral for loans. BlackRock's Larry Fink, whatever people want to think about BlackRock, the idea that they went from extremely skeptical of the asset to fully embracing it, and now they own the single largest spot ETF in the world. These are major developments. And so that's why I can't say I'm all that surprised that the people that we've managed to speak to and get a little bit of interest from haven't just been Bitcoin only venture funds.
Yeah, and it seems like you're sitting at a nice intersection where when you're talking to the Bitcoin-only VCs, you can kind of position yourselves as a Bitcoin-only company. But maybe when you're talking to traditional VCs, you can say, look, our customers can raise the capital and they get dollars and they can deploy it into whatever asset they want. And maybe you don't have to necessarily convince the VC to be all in on Bitcoin, although your revenue models are obviously based on Bitcoin. But it's very interesting that the borrowers just receive cash. And I think that that's worth highlighting for our audience. You can take this cash, you can live off of it, you can buy MSDR, SDRC, you can invest in anything non-Bitcoin related. It is your money, and if you do buy Bitcoin, it's your Bitcoin to custody. So why don't you walk us through just the user journey itself, starting from the initial application to receiving the funds, just whatever those steps in the process are, so we make that crystal clear for audiences.
Absolutely. So effectively, the way that folks would get started, wherever they find out about us, whether it's from one of my pieces of content, whether it's from this show, or an ad that they see somewhere else, or they hear about it from a friend, they'll go to joinhorizon.com. And then from there, we actually just launched a brand new website today. It's just gorgeous. Previously, it was, kind of the website you make when you want to get this thing live. It's a really good idea. And you just push it out there. Still well designed, but definitely could be improved on. This website that we just published today, outstanding. And effectively what the homeowner will do is right on the homepage, they have a little slider and they could put in their home value and their mortgage balance. And once they do that, they just click unlock it today. And that'll take you to our application page. From there, you put in your home's address. Once you put in your home's address, it'll tell you whether or not you're in a state that qualifies. If you are in a state that qualifies, you just click next. It takes you to a more fully fledged calculator where you can set a couple of different toggles up. The first two toggles you could set up are your home value and your mortgage balance. Your qualification won't just be determined by the state that you are in, but also your mortgage balance. So with Horizon, with our current capital partners, we cannot go beyond 65% CLTV. And so, for instance, if you want to use Horizon, you have $1 million home, you have a $650,000 mortgage balance. In our current state, you wouldn't qualify. But for mortgage balances lower than that, chances are you would. So you set your mortgage balance, you set your property value, and you set your chosen investment duration. One of the neat things about Horizon is that there are no term limits. And so not only do you have no monthly payments, not only do you own the Bitcoin or whatever other asset you purchase free and clear, and we have no claim on it, but also you can use this for 1 year, 5 years, 6 months, 10 years, 50 years or more. So whether you're planning on staying in the home just for this next season of life, or whether you're already in your forever home, you can use Horizon. So we have the investment duration toggle there so people can basically say how long they want to stay in it. And there's no preset term limit in the contract itself. So this is really just for the customer's perspective so they can see what their home's Bitcoin potential is over any number of years. Then from there, we have a beautiful little bar chart on the left side of the screen that actually shows them the value of their home today and the amount of equity that they're swapping into Bitcoin. And then those same amounts in the future after Bitcoin has had time to grow, and what the share in the home has grown to as well, and what the home's future value is. By default, in our calculator, we have assumptions already plugged in. Those are that the home is going to grow by 3% over any number of years on average, and the Bitcoin is going to grow by 25% over any number of years on average. We chose that because we wanted to keep it conservative and also factor in two things. Number one, Bitcoin's a $2 trillion asset now. And so who's to say that it will continue having those 40, 50, 60, 70% plus years on average over multiple year time horizons. But we also wanted to make it so that homeowners could go in and adjust their Bitcoin growth assumption to their liking, right? Maybe they're more bearish on Bitcoin than a 25% average over their investment time horizon. Maybe they're much more bullish, right? And so effectively for any investment scenario, homeowners can go in, they can plug in their assumptions, they can plug in their property and see what their potential could be. And then from there, they click next, they fill out their name, their phone number, their email address, and they schedule a call. They hop on the phone with us. We chat about them, or we chat with them, answer any questions they may have. Usually it's me taking that consultation as well. Potentially people listening to this in the future, it may be someone else as we begin hiring folks out. After that consultation, you get passed over to our provider, who provides you with a draft agreement. The customer reviews that draft agreement. It has all of the details in there that they would need to be aware of. Once they review it, from there, our provider orders an appraisal. The appraiser comes out to the property, and that's the way that it gets determined. It's going to be an in-person, full walk-around appraisal. And only one of those is required for most homes. For larger homes, like homes that are $2 million, $3 million, $5 million plus, more than one appraisal may be required. Once that's done, that number gets put into a final contract, and then that's that. Upon signature, the funds get wired to the homeowner. They can either be received to their bank account or received to their Horizon account. And then the Bitcoin can be purchased through the Horizon account and sent to a wallet of their choice, or they could receive the funds to their bank account and they can go purchase Bitcoin at their exchange of choice. All told, right, for the average homeowner, it takes about 2 weeks to go through this process. So when you're comparing this to other home financing solutions, say a HELOC or a mortgage or a refinance or anything like that, we pride ourselves in the fact that this is a much more expedient process, which tends to be a very good thing for Bitcoin, right? Because Bitcoin's price can kind of run away from people very quickly. I did have a lot of calls this summer. We've had plenty of calls since we launched, but there were a number of folks this summer who had said, you know what, I love this program, but I'm actually going to wait until Q4 of this year because I think Bitcoin's going to dip. In my own mental model, I was like, well, I don't think that's going to happen. But obviously I didn't say that to the homeowner. That's entirely up to them. It turns out they were right. Bitcoin did end up dipping. And now I'm getting a lot of calls from those folks who said that they would wait, saying, all right, I want to get this thing started. So that's the process end to end. It's very seamless. Actually seeing your home's Bitcoin potential can be done instantly by visiting joinhorizon.com. The calculator is now on the homepage. And then going through the entire process and scheduling a call takes no more than 90 seconds. So we pride ourselves in the fact that this is a seamless process, and the website has so many FAQs, so many explainers, because we want to make sure that homeowners understand the entire way that this process works.
Amazing. And you mentioned things like the HELOC and the reverse mortgage, and these are some other, I guess they're not necessarily companies, but there are companies that operate within these types of financing structures that you might consider a competitor. But one other competitor that I've seen emerge, I don't believe they've launched yet. So for all I know, it's just an idea on a website, but Sovana, Sovana, they seem to be taking a slightly different approach to how to tap the home equity, where they are essentially using your home as the collateral to raise capital, and then they participate in 50% of the upside, and you, the borrower, take on 100% of the downside over some other long term, like 5 or 10 years. I'm curious if you're familiar with their model, what you maybe like or dislike about that approach.
Absolutely. So I am familiar with Sovana, and it's really cool, right? I love that there are different options for different homeowners. And one of the really cool things that I like about Sovana is their combined LTV is actually higher than Horizon's maximum combined LTV. And so if you go to your website, I believe that if you put in a mortgage balance of $500,000, for example, on like $1 million home, then you'll actually be able to draw out slightly more than you would be able to with Horizon. They have a fixed term length, that's true, and they also share in the Bitcoin's upside, that's also true, but it's for a different type of homeowner, right? And the more options that are out there, the better. I believe that the intersection of Bitcoin and real estate is an inevitability, not just for homeowners, but speaking more broadly, even commercial properties as well. Chris Drizga, I'm not sure if you've spoken to him yet, but he's gone quite viral on X as of late. That's fantastic. And he's talking about how Bitcoin can really save commercial real estate and all of the pitfalls of commercial real estate, the turnaround time to actually getting builds done, the deals that end up falling through, and a multitude of other factors like that as to how Bitcoin could basically be a lifeline for an industry that's kind of floundering. And so I think the more options, the better. I am familiar with Sovana. I wish them all the best. And yeah, the more the merrier. I tend to think that you'll start to see products like this at major American banks over the next 5-10 years. And so really the race is on to see who can build the best product with the highest total addressable market. And we feel very well positioned to be able to service that at Horizon.
Amazing. Why don't you give listeners a place where they can go to follow your work and maybe something that you're excited about regarding Horizon that's around the corner?
Absolutely. So if you want to follow more of my work, and Chase, thanks so much for coming on the show. This was awesome. You can find me on X at Joe Consorti, JoeConsorti. And one thing I'm excited about at Horizon is our continued nationwide expansion. So as I mentioned, we are live in those states that I mentioned, but we also have a number of states that are on the way that people can sign up to get notified when we go live for. Those being, I have them in front of me, Alabama, Arkansas, Hawaii, Idaho, Indiana, Louisiana, Kansas, Kentucky, Iowa, Minnesota, Montana, New Mexico, Oklahoma, and Wyoming. So lots of list reading in this show, but that's what I'm most excited for. I really want to service homeowners in all 50 states because homes they tend to be people's largest asset, right? But they're not necessarily their best performing asset. And so ultimately, I want to help people diversify their wealth into an asset that has a higher growth potential than that 4 to 6% a year that they'll get in their home. And so their house can just be a home and they don't have to worry about its financial performance, and then Bitcoin can be there to do the rest. And so for me, I'm just excited about bringing this model of homeownership to more and more people nationwide.
Well, Horizon and other companies that may emerge like it are solving a very real problem in my family's life. So I know that there is product market fit here. There is a big market, and I'm very excited to see trusted Bitcoiners like you and the team behind Theya really attacking this space. So all of the best of luck to you. I hope listeners go and check out, it's joinhorizon.com, right? Joinhorizon.com. And if you made it this far in the episode, perhaps you have a parent who has a lot of their net worth tied up in real estate and maybe has very little exposure to Bitcoin. Maybe have that conversation with your parent, because these types of tools are not only becoming more and more accessible, but they're very necessary if you already are convinced that Bitcoin is going to outperform real estate in the coming decades. So, Joe, thank you so much for coming on, and we'll talk again soon.
Thank you, Chase.
Thanks for listening to this week's episode of the show. Don't forget to like, follow, subscribe, or leave a rating on your preferred podcast platform. One of the missions of Acropolis is to educate the public on the transformational benefits of Bitcoin and Bitcoin treasuries for companies. The more engagement we get, the more efficiently we can spread this message. Lastly, quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Companies interested in Acropolis can go to acropolistreasury.com to get in touch with our team.